right, and it looks like we are live. Okay, so good afternoon. Today is Thursday, July 7th, 2022. It is just right afternoon here in New York. We are seeing what it appears to be the beginnings of a bear market rally. Let's see if this one has legs. It's just every risk asset right now is just rallying. S&P 500 is up about 1.2% today. Let's take a look at who the winners are. I think it's mostly in energy. Yes, it is. Metals, energy, biotech even. All right, and tech. Tech is a big winner, as we expected. I said that if you're going to go long, all right, if you're going to go long with growth, all right? And we've been looking at the IVW over IVE trade, which is growth divided by value. And we saw growth was coming up. And I said, if this is uptrending, if it is trending up, it means that growth is outperforming and that NASDAQ will outperform the Dow. All right. If it's coming down, it's the opposite. Value will outperform growth. All right. And so I've been showing you this for the past couple of weeks now. And I said, if you are going to go long, if you're going to play the bear market rally, you might as well go with tech. And it appears that is correct. So the NASDAQ is up 1.8%. And we have the Dow is up 0.86. So a little bit more muted response from the Dow. Let's take a look at also small caps. Small caps today are also staging a very good rally, around 2.25%. It looks like a lot of that is due to liquidity sensitivity. And again, we've been saying this, crypto and Russell 2000 are very liquidity sensitive. And so one thing that I posted on yesterday's in the Discord yesterday, if you can place yourself on mute, I can hear a little bit of a background there. There you go. I just muted you just temporarily, just because you've got a hot mic. Okay, I'll unmute you at the very end. Okay, and that's where you can ask me some questions. But anyway, on Discord, I posted this. It does look like we're seeing more advances than declines for yesterday. Now, the day before, we had more declines, but that was a pretty small number. And then the day before that, we also had more advances over declines. So we are seeing some liquidity entering into the junk bond market. All right, it is starting to curl up. We shall see. I'd like to see 4 or 5 advance over decline days in a row before I say, okay, this rally may have some staying power. Okay, so like I said, I want to see 4 or 5 days in a row. If I see another day or two, I mean, right now, if you look at HYG, I mean, it looks like today is going to be an advance over decline day. Of course, we will want to confirm that. There are times when HYG is up, but then there will be more declines than advances, and those are usually warning signs. So we'll see if that's the case today or not. But I would say more often than not, if it goes up, it means there's more advances than declines. And today is a pretty strong update in HYG. So we will see. It may just go up and then come back down. It's possible. It's hard to tell right now. Again, I will be monitoring that advanced decline line for corporate bonds and junk bonds, and I'll let you guys know what I see. I post that on a daily basis. Okay, so that's that. So equities are up, volatility's down, VIX is down. Is it just me, or I think the equities and VIX, they're not moving at a -1 correlation like they used to. It doesn't have as strong of a negative correlation. All right. Usually it was minute by minute, tick by tick. I'm seeing less and less of that now, and I think partially it's because of dollar. Instead of hedging, I think a lot of people are actually selling and getting into the dollar, and we've actually been seeing that this year. Now, I think the reverse is starting to happen right now, where retail, in the last 2 weeks, retail has really been liquidating their index ETFs. But guess what? Block trades on those index ETFs are increasing. So what does that mean? Institutions are buying it. Institutions are buying all those index ETFs that retail is selling to them. Okay? Does that mean it's the bottom? No. We saw this in the end of May. We saw this also in April, where institutions were buying the dip, and now we're lower, right? So institutions tend to space out their buying. They don't buy all at once. It's not like you and me where we can time our purchases, wait for those value levels. For example, our plan right now is to buy the S&P 500 if it gets down to here, the 342 range, right? Actually, I'm starting to think that I might scale in a little bit above that with SPY shares. But for now, we'll assume the plan is the same. But around 342, 350, that's where I want to start legging into some SPY shares. And then under 340 is where I want to get long on in-the-money calls for a year out. All right? Now, you and I, we can wait for that. Most institutions, with the amount of money they have, they can't just buy everything all at once here. It would, it would affect the markets too much, and they know that. So usually they'll space it out over long periods of time. For institutions to build positions, it takes them months, even years, to build a position. Okay, depending on the size of the institution. The bigger the institution, the longer it's going to take to build a position. So here we're seeing in the last 2 weeks, retail has been selling, but institutions have been buying. Okay, so I think that's why we're seeing the negative correlation, that really strong negative correlation between the VIX and SPX. I think we're starting to see a little. I'm not saying it's like off, or anything like that, but it's not as strong as what it used to be, at least on a very short-term basis. I think daily it still works, but minute to minute, if you're like a day trader and you're using the VIX as a signal, sometimes those signals are not as strong, and I think it's because sometimes you see like the VIX go up, but then also indices go up, and I think it's because there's a lot of cash coming into the market. Same thing, sometimes you see the VIX going down and the market going down at the same time, and I think that's just a dash for cash. Usually when the VIX is going down and the indices are going down, I usually see the dollar going up. So that is, I think, an interesting phenomena that we haven't seen for a while. We haven't seen something like that, I think, since before the QE era, where things like that were more normal before QE. But right now, King Dollar is still on a rampage. We were starting a little bit lower. Now we're in positive territory again. The major trend obviously is up. At some point, this trend will stop. But trying to pick a top in this is probably going to be bad for your health. All right? Bad for your portfolio too. So main trend is up. The trend is your friend. I see this still going up. I think there's a very good chance, especially if we have some FOMC fears, or if if inflation just remains stubbornly high, which I don't think is going to happen. But let's say it does. I definitely can see us going to 120 or so. Or if we have some other bad news coming out of Europe, I don't know, if Germany decides that they need to shut down even longer, or they have even more issues, or they start rationing out energy, any type of bad news like that, then we can definitely see, I can definitely see euro actually losing parity, losing that, right now, let's essentially say it's $1, okay? Let's essentially say euro is $1, it's $1.01, but okay, let's essentially say it's $1, all right? It's at parity. So if it loses that parity, I can definitely see it going down into like the 80s and 90s, 80 to 90 cents, which would be, where it was about 2 decades ago. as I explained in yesterday's video, Germany is the export powerhouse of the Eurozone. All right. And so when the Eurozone, and when Germany is shutting down its industries, it's not exporting as much, their current account surplus is at risk. And so if there's no current account surplus, then I think it's very possible, or if there's no current account surplus, then it can't justify the euro being this high. All right. And so I think if those shutdowns last longer than what the market is expecting, we can expect this to come down, especially if it lasts like 3 or 4 quarters. I don't think it's going to do that, but hey, who knows? Trying to predict what the news is going to be, that's, and betting money on it, that's pretty stupid. But we shall see. I'll just sit and watch. But for now, that dollar rising is headwinds for EEM. Although today EEM is up. So I did leg into some more puts for those March puts that we've been talking about for now a couple of weeks. So as we'll see if those puts pay out, but I did leg in a little bit more. I'm still mostly in cash, guys. Okay, I'm like 94, 95, maybe 94% cash now still. Okay, I was like 95 last week. Now I'm at 94. So, that just gives you kind of an idea of how slow I'm scaling into this, because this may take some time. This may take time to manifest itself, especially with earnings coming up. We do have earnings that's being kicked off in about a week or two. So who knows what happens? Actually, today's response in EEM, Asia, it all started in Asian cash market hours. Samsung reported earnings. Samsung is a big electronics and semiconductor company in South Korea, and they released better than feared. That was the narrative. Better than feared earnings. And right then is when all the index equities here in the United States, that's when they all started curling up, especially in the NASDAQ. And then once we opened, all the semis, the tech stocks all led the rally. And then oil was up too. So boom, all the oil stocks are up, sending the whole broad market up. So that it was the impetus for, I believe, today's rally. And it started in tech. And I think it started in tech because of that earnings. They did guide lower. That is part of the game in earnings, surprise to the upside, guide lower. If we look at NQ, I can definitely see something like that happening over the next couple of weeks where, perhaps, earnings are not as bad as they feared, so it goes up, and then after it goes up, the earnings guide lower, and then we start our next leg down. The big trade, again, and I've been saying this for a while, the big trade is either to start accumulating at 3,420 on SPX, which is around 342 on SPY. All right, start accumulating indices here, or at 395 and above, start scaling in 6-month vertical put spreads, and try to maintain at least a 3-to-1, 4-to-1 reward to risk ratio. Okay, so that is my big trade. So I'm just waiting for that. Either it's going to come back, it's going to come up here, and then I'm going to buy 6-month put debit spreads, or it's going to come down here, and I'm going to start accumulating SPY shares again and in the money calls that are 1 year out. Okay, one or the other. All right, right now we're still in no man's land. This is still all noise. Although 1.17% is nothing to gawk at, but still, it's noise. It's all noise until we get to our levels, our bigger levels where we have higher probability. All right. Speaking of waiting, but close, oil. Lots of chatter around oil. Oil is up almost 6% today. That's quite a move. I think if this were to continue, we can get to 111 pretty quick. Maybe maybe even by tomorrow, maybe early next week, we might get there. Okay. One thing that I do want to mention with commodities is, we've been looking at inflation signals, and we were able to, and we called the top here in oil on the 15th of June. We also called the top in the grains back here around mid-June as well too. We called the top in grains here as well. Okay, and part of that was, well, with grains it was because of the planting data that came out. For oil, it was also the gasoline, the crack spread that was, it was starting to narrow. It wasn't widening as fast as it was. But also, another signal that we got was TIP-TLT, which is the index versus benchmark in Fed talk, or it's really, what it, in essence, what it really is just the inflation-protected treasuries over long-term treasuries. All right, and so for that, it's starting to come back into its box. It looked like it was breaking out of its box, but then it's coming back in. And what I said yesterday was, if it closes this week at 101 or above, we may see the inflation trade come back. Okay? So that's something to watch out for. Definitely something to watch out for. I'm going to be eyeing this one like a hawk. All right? So that's something that we will want to observe. Let's go through the rest of the energies. Again, oil is up today. I'm still sticking to the plan. I'm going to start scaling into put vertical spreads 6 months out, or maybe 3 to 6 months out, starting in at 111. I'm going to keep it really small just in case it gets to 120. That's where I really want to slam those puts, right here. Okay, here I'll scale in a little bit just to get skin in the game, because it's one of those markets where moves are very quick. It doesn't always come back to where we want it to. So sometimes moves start very quickly, and so I just want a little skin in the game. Yes, there's going to be a possibility of a drawdown as it comes to here, but that's why I just want to keep it small and keep it a little bit further dated. Again, 3 to 6 months out, right here, okay? And then right there is where I'm going to slam the puts, 120. So that hasn't changed. Nat gas. Nat gas making a wild comeback, 13%. Good game to those that were short. GG. I mean, you don't have much of a portfolio left if you were short on natural gas yesterday. This may come back up. I actually do think it's going to come back up, this one. Especially if that export terminal in Texas gets cleared away, and and they're able to start using that. And if some of our natural gas here in the United States gets exported to Europe, I can definitely see our supplies coming down, and we might see a little bit more juice come back into natural gas. So be very careful if you're trading this. I don't recommend trading this. This is just these moves sometimes are just outrageous in natural gas. Natural gas is just very prone to these kinds of moves. They call it the widowmaker for a reason. It's quite dangerous. So if you like exotic and dangerous, this is your game. Not for me though. Gasoline also making a comeback. Crack spread widening. This comes up, there will be more of a bid for oil. But again, I also see this coming back up and then failing. And that is when we will move also on oil. Oil, no, my plans haven't changed. Still the same levels. Let's go to the grains. I know we covered corn, wheat. Wheat still coming down. Maybe it might come back up. Maybe. We will see. Soy. Still on its way down. I think the strongest of the grains was corn. It was corn. All the grains don't really look strong now, but I think the strongest it was corn, but we will see. I think our edge though is in corn for the short So I'm still waiting on that 720 short. I would love to see this come down. All right, I'd love to see it go up first, and then I'm going to buy some puts here. I don't think it's going to happen, though. I mean, even yesterday I said, oh, I give up on this. It's not going to happen. We'll see. We'll see. If it happens, I still have my alert there. If it happens, I'll get in. Okay. I did mention that I am legging in more into China and EEM on our Discord. I think this is all in sympathy with that Samsung earnings. Maybe it might go up a little bit more, but when it comes to our China lie detector and our metal lie detector, Australian dollar, it's still in this kind of channel going down. It wasn't able to really break, and it's hit this high multiple times today, and it's still just not able to break past it. I think this is temporary. Tomorrow we will see. Most likely we're probably going to fall. Maybe it might gap up at the open, while our markets are closed, and then it may come down, and that will be the sign that we're still right in our trade so far. Again, I added some more November puts for FXI. All right. And I bought some more. By the way, FXI is November put debit spreads. Okay, I have a put debit spread for FXI. For EEM, it's not a debit spread. It's just flat out puts at 39 puts for March 2023. EEM there's already discussions about bailouts for Sri Lanka. India is talking about bailing them out, sending them an aid package of $25 billion. But politically and domestically in India, it's not very popular. Internally in India, the discussion is, well, why should taxpayers in India have to pay for Sri Lanka's troubles? So let's see if that passes or not, but they are talking about bailing out Sri Lanka. If you look at, remember yesterday I told you guys about the emerging market currency ETF? Well, it's down today. It's still down today. Okay. Generally, EEM follows CEW, but CEW, okay, could lead by a couple of weeks. So it's not like an immediate lead, okay? It's not as quick. It's not as a quick indicator. Sometimes, for example, I mean, like here, 1, 2, 3, 4, 5. I mean, CEW called the bottom 1, 2, 3, 4, 5, 6 sessions before, okay? So it can be like 2 weeks. It can be even more. And some of these, it was like, if I look back like 2014 or so, there was one where CEW led by about 4 or 5 weeks. So that's definitely possible. So any signal you get from here, you still want to be extremely patient. So I'm still legging in very, very, very slowly. Okay, so you don't have to get too aggressive with that. Okay. Okay. So yeah. So that is EEM and my trades. Oh, one other trade that we're in, UVXY. I legged into some more. Call spreads. This time I did the 14-24. So as you can see, UVXY is coming down. And having said that, from yesterday, my 14-24 call spreads are still at break even. I bought them at I legged in. My order filled at 185. It only got partially filled, but it got filled at 185 and still around 185 right now. Well, why is that? Mickey, why is that? It went against you. Shouldn't the spread go against you too? Yes, but again, we're putting the math in our favor. Remember how I talked about skew, option skew? That's why looking at options is so important, looking at this skew, okay? This is a huge skew. Basically, yes, my long strike is going down, but my short strike my option that I'm short on is actually decaying faster because of the higher implied volatility. There's more implied volatility to be crushed on my short strikes. So that skew is actually helping me out. I also bought, remember the 15-20 call spreads back about a month ago, or maybe 3 weeks ago or so, and I bought them around 14. So a month has passed, and we're lower than where I was when I bought these. I'm still about 10% ahead. And why? Because the skew. At the time, the skew difference was about 10 percentage points difference. Now it's about only 5 percentage point difference. So this decayed a lot faster. All right, and that is why I'm still at a profit. It decayed faster than my long strike did. So even though my direction was wrong, I was right on volatility, and that is why I'm still ahead. Putting math in our favor, okay? Math, it does work, all right? So I am scaling into this. I'm scaling into this slowly, okay? UVXY, I mean, technically, like just from, looking at, actually, we might as well look at it together. Let's go to VIX Central. It's a free tool, wonderful tool. Contango is widening, okay? It's not as bad as the Contango can, especially like in a rally, it can get up to like 10, 11, 12, 15, 16%. Okay, we're not there yet. Contango is still kind of narrow, but definitely if it widens, I can see UVXY coming down to like the 12.5 zone, and maybe that's where I leg in some more. But I do believe that we have one more large volatility episode left for the year. Okay. Maybe the impetus for that will be the inflation report next week. Maybe it will be earnings. Maybe it will be end of the year central bank meetings with the Fed and ECB. I'm not sure, but I'm not trying to predict the future either. It may not happen, so I may be wrong, but it is what it is. I mean, this is my, this again, most of my portfolio is long-term shares. My spec account is what I hedge and speculate with. I still, I'm mostly in cash in the spec account. The big trade is if it does rally. If it does end up rally, I'll then scale into those puts that we talked about on the indices, most likely IWM or the triple Q. And that will happen around when S&P 500 is around 3950 or above. 3950 to 4150, I'll start scaling in slowly on those puts. But I'm going to have some of this too. Because right now, another reason why I like these for now, even though it's not my favorite hedge of choice, is because also VVIX is just out ridiculously low. This is the VIX of the VIX. So the VIX tells us how expensive premiums are on the S&P 500. The VIX of the VIX tells us how expensive premiums are on VIX and UVXY and other VIX futures ETFs. It tells us how expensive those options are. So VVIX being this low, it means premiums are super, super cheap on UVXY. Super cheap, okay? So again, historically, it just hasn't been this low since pre-COVID. Literally, we haven't been here since pre-COVID. So, I think the math definitely is in the favor. I mean, if you're going to buy calls on UVXY or VIX, you probably should do it when VVIX is low, so you get maximum value out of it. Now it does need a spike and everything, and VIX will need to spike in order for us to have big gains. But it's nice to know that it's at lows. Because if you buy VIX options or UVXY options while the VVIX is high, even though it spikes, if it doesn't spike as much and VVIX collapses, your options may still go down, even though you're right on direction. You're not right on volatility. So this at least gives us some value in those UVXY or VIX calls. Okay, that's my reasoning behind adding to my UVXY call spreads. Okay. So that's that. Let's look at some of our other data that we look at, on a usual basis. What do we usually look at, guys? We usually look at interest rate spreads, right? 10 and 2. This is important for bank spreads. We are about a week and a half before JPM kicks off and the other banks kick off their earnings season. Actually, I'm curious, what's going on with XLF? Is XLF going up today? It is. It is going up. Oh, not bad too. Not a bad amount. Of course, not as good as tech, but around what the market's doing. Okay, so it's doing and the average of what the market is doing. We shall see if that continues. This is just 1 day up, so we'll see. We'll see. Yeah, we'll see if this continues. If I see another gap up tomorrow in this, and the market, and let's say a junk bond advance decline is another advance tomorrow, I may go long and lotto some XLF calls. Maybe, okay? Maybe. And if I did, it'd be very small, super small, okay? Like less than 0.1% of my portfolio. Less than that, okay? Maybe like 0.05 or something. Very small. But that's a potential, and especially usually when we see, the 10 and 2 getting inverted and then coming back out, generally XLF has this huge relief rally. Not only that, seasonally, bank stocks tend to rally about a week and a half before JPM's earnings release. So we have two factors going in our favor. If this were to go up, and again, junk bonds advances over declines is going up. That means liquidity is slowly entering the market, at least on a temporary basis. So if I see that tonight and we get that confirmation tonight, tomorrow I may lotto into some XLF calls. Okay, small lotto, very small. Maybe some call spreads even. Okay, because I don't want to deal with that IV crush. But that's that. 30 over 10. Let's take a look at 30 over 10. 30 over 10 is coming down. Okay. I still think this is no man's land. We'll see what happens. We'll see if it comes back to inverted. If it comes back to inverted and stays there, then that could be a problem. A lot of quantitative algorithms are probably going to dash for cash. Okay. There'll be a huge risk-off sentiment, especially amongst quantitative funds, if this goes down to inverted again or flat. Hasn't happened yet, but if it does, watch out, okay? Again, I said this last year, starting from last year. This is going to be the year of the quantitative algorithm, all right? So we'll see, okay? We'll see. All right. TIP, TLT, inflation versus long-term bonds. Again, we saw this. It's coming back into the box. Will it break out again? And will the inflation trade come back? To be continued. We will see. Stay tuned. All right. EEM and emerging market currencies. Again, emerging market currencies down. I think this will follow. We will see. It may take some time. So there's no point in rushing things. IVWIVE, again, growth is looking like it will outperform value, at least in the near term. Let's now talk about cryptos. Every day we're going to be showing this chart right here. This is the Bitcoin to gold ratio, okay? And I told you what my plan was for Bitcoin. I'm going to buy Bitcoin when Bitcoin gold ratio gets to here. That's where I'm going to buy the dip. All right. And so because Bitcoin, gold ratio, it's going to change based on what gold is doing. Right now, gold is at 1760. Let's say it stays around 1800 or so. I mean, if that's the case, then we're looking at, around 11,000 to be the buy for Bitcoin. If gold stays, again, at around 18,000 or so. If gold miraculously rallies to 2,000, then we're looking at more 12,000 in Bitcoin. If gold comes down to 1,500, then we're looking at 9,000. That's what this ratio is. Okay, this is a Bitcoin to gold ratio. So it's not really pinned to the buy level is not pinned to a actual dollar value for Bitcoin. It's going to be a Bitcoin value in relative terms to gold. And so when this line gets touched, that's when I am going to buy. You can do this yourself. You can type in, Bitcoin over gold, Bitcoin BTC USD over XAU USD. XAU USD is the spot gold market. I don't use the futures contract just because the futures contract does carry the cost of carry within the contract value. And so whenever that rolls too, sometimes you have these these little gaps, in the chart. And so sometimes it messes around with this ratio too. So I use the spot price of gold for that. It's very similar to the futures. If you don't want to use XAU USD, you don't have to. You can use the futures. Just use the front month rolling continuous front month. That's fine too. It's not that different. And then you can chart this line yourself, or you can just I'll of course I always tell you guys whenever I do anything, I always post it on the Discord. So if you guys are listening in from Twitch or YouTube, be sure to check out our Discord so that you can see all those trades, my entries and timing and everything too. Okay. So right here is where I'm going to start buying Bitcoin right here. Okay. It may take a while, so maybe the ratio is a little bit higher. So the longer we have to wait, I think the higher the ratio is going to be. And I think a lot of hedge funds are looking at this line. I think a lot of big institutions are looking at this, and they'll probably be buying here. Speaking of buying in Bitcoin, I mean, wow. Talk about some animal spirits in Bitcoin. Don't know what really changed. Maybe it's just, I don't know, maybe market participants think it came down too much. But we've just been seeing some heavy call buying happening. Just heavy call buying. Not sure what to make of that. I know a lot of the calls that are being bought are actually nearer dated, and I don't think they're the same strikes as the calls that were sold. So, let me go to the other page real quick. Give me 1 second. Is it this one? Yeah, this one. So yeah, even amongst block trades, there's a lot of calls being bought. All right, it's a lot of calls being bought. Even amongst retail calls bought, block trades bought. Retail looks like it's coming back into Bitcoin in mass. And look at these. Look at all the big strikes. 29 end of monthly 23,000 calls. I know that a lot of the calls sold last week and the week before for July were at 24,000 strikes or above, and then anything dated longer than that, I believe it was like over 35,000 was some of the calls that were being sold. So it doesn't look like it's covering. I think it's actually more speculation. Okay, I think there's a lot of speculation going on here. All right, so we will see. If generally speaking, when you have a lot of calls being bought at that moment, okay, and again from our dynamic hedging, the thesis here is that a lot of institutions are now using the same dynamic hedging techniques that they use on things like S&P 500. Now they're using that for Bitcoin. Okay, I think Bitcoin is getting more and more institutionalized. So when calls are being bought on the market, and calls are the right to buy, so buying a call is a bullish position, the market maker has to sell that call. So when the market maker sells that call, they're taking a bearish position. So in order to even out that bearish position, they're going to long the underlying, which in this case is Bitcoin. All right. So as there's call buying, Bitcoin is going to have a bid. The physical Bitcoin is going to have a bid as there's more call buyers. Now, here's the thing. What happens if those call buyers start taking profits and they start all dumping all their calls at the same time? The market maker is going to have to buy those calls back. And when they buy those calls, guess what they have to do? They have to short the underlying, to even out their books, to remain neutral. Okay, is that what's going to happen? We shall see. If you are a day trader, I highly recommend that you keep an eye on that order flow, especially in calls. Once you start seeing lots of big call orders, you look at the sizes. If you start seeing lots of huge orders, especially on the July 29th, 23,000 calls, if you start seeing a lot of those getting sold off, it's probably a good idea to at least neutralize your longs if you're long. Okay, if you're a day trader going long, I keep a sharp eye on this if I were you. Okay, but I digress. Let's look at what this looks like. Okay, so the weekly for this week is only 15 hours left. Wow, it's still pretty decent. Oof. So people are so this is like zero DTEs, right? So zero DTE gambling on 20,500. I can definitely see some profit taking happening later today if this keeps if this keeps going up. Actually, possibly even here. Look at this. 11,000, 13,000. Maybe these guys take some profits as well. We shall see. Okay. Next week's we're seeing more volume again, more time. So I guess we're seeing higher strikes. Definitely, there are some expectations that this may go up. So we will see if those people are right. The skew. Oh, I just had the skew data. Where happened to it? I think the skew is still in reverse, right? Yeah, it's still reverse skew. And it's still not until September where we start getting higher IVs on the call side, or on the higher than in the money side, on this side, on the right side. So we'll see what happens. Okay, so it doesn't look like the structure of options positioning has changed that much. I think the monthlies, yeah, exactly here, monthlies, that's where you see a lot of these volumes coming up. 20,500. So we're looking at in the monies. All right. I'm going to have to go back and see if these were sold or bought. But just based on just a quick glance of all the day statistics, it appears as if there's a lot of call buying today. All right. There could be actually a lot of it. I mean, it's pretty equal actually too. One thing, is it? No, it's definitely skewed toward buys, but yeah, about 50% more. Okay, so yeah, I could see it being a spread. Maybe there are longs, some calls, short some calls. That could be. Maybe they have a call calendar spread. Maybe they're selling some of the shorter dated and getting long some of the longer dated. Very possible. Very possible. So, but it doesn't look like. I mean, most of the big volume strikes tend to be for July. So, I'm not sure if that's what they're doing. But I did monitor some of this last night, and I did see lots of calls being bought. I mean, most of these, just from my quick glance at the orders, it did look like lots of small orders were coming in. It's evident by here too. Lots of small, like retail, just coming in and just buying calls. That's what it looked like. So, I think definitely people are trying to time the bottom, and this is actually very frequent. This is common in low liquidity bear markets. A lot of people are trying to call the bottoms, sometimes a little bit too soon. That's actually very frequent. Again, I told you, bears end up getting wiped out in bear markets. It's just something that happens. Those bear market rallies can get very ferocious. Yesterday, I told you that there was a hedge fund that shorted Luna during the Luna crash. So how could it be that they go out of business and lose 99% of their money even though Luna almost went to zero, practically went to zero. It's because those bear market rallies in between wiped them out, and they took too much risk. And even though they were wrong by just a couple of hours, they just got liquidated. Okay, so that's what could happen. I mean, low liquidity markets have violent counter reactions. It's just the way it works. All right. Hence why we call it low liquidity. There's low liquidity, so that's why it can move quite easily. All right. So yeah, that's the Bitcoin market for you guys. I'm still waiting. I'm gonna remain patient. I just think the odds just aren't really there for a big play. I mean, I get it. Some of you guys do day trading on Bitcoin, and I'm okay with that as long as you guys manage risk. Go for it. It's just not something I do. I don't like to sit in front of my screen and mash buttons all day. That's just not my style. I like to look at big moves, big weekly, monthly moves, and try to capitalize on that. That's usually where the money is. That's where you can lean on a trade and really get a good payout. So what if you can make 800% in a 0 DTE? You're probably going to put less than 0.5% of your portfolio if you're exercising good risk management, of course. If you're not exercising good risk management and you're still doing those plays, you're probably going to get wiped out, within a couple of months. One bad trade is going to wipe you out. But if you're exercising good risk management and you're getting these like banger plays, I mean, then you're keeping everything really small. And if you say like 0.5%, you make 500, 600%, I mean, yeah, you're making 1 or 2%. But the trades that I like to do are trades that I can put 10, 20% into it and try to make double or triple over a course of like weeks or months. Those pay. You only need like 2 or 3 trades like that a year to have a banging year, okay? That's just my perspective and my style, okay? But I am going to be ready to buy here. So that's my plan, okay? Let's go over the plan one more time, okay? Let's go over the plan and what the positions are, all right? The plan is this. Bitcoin to gold ratio gets to this level, this red line. I will start scaling into Bitcoin long term, okay? EEM, I'm still seeing emerging market currencies coming down. I will still leg into this. I legged more into this today with our EEM March calls. I bought some more, okay? FXI, Australian dollar still is in that downward trend. I legged into more of these today as well too on the pot, okay? So I still have these. I'm legging more in. I have until November, so I'm fine. All right. UVXY, I'm legging into more of these, except I changed my strikes. I still have my 15-20 call spreads. I'm now legging into the 14-24. Okay. If it drops down anymore, I will take a look at the skew. It really depends on the skew. I want about 10-point differential in the skew. Okay. And I want at least 4-to-1, 3-to-1, 4-to-1 reward to risk ratio. Okay. So that's the plan on my existing positions. And again, as always, and still right now, I'm still waiting in no man's land in the indices. If it gets to SPY around 395 or above, I'm going to start scaling in to some 6-month put vertical debits on IWM or triple Q. If SPY gets down to 342 or so, I'm going to start legging into shares long term. If it goes under 340, I'll be buying 12-month in the money calls. Okay, so that's my plan for SPY. For oil, I'm waiting for this rally. If this rally gets up to 111, I'm going to scale into some 6-month put debit spreads at 111. Very, very small, because most of my put buying will happen at 120 or above. Okay, I'm just scaling it at 111. That is all right? And then, of course, disappointing, but still is part of the plan. If this can get to 720, we will short. I don't think it's going to get there until next planting season, and by that point, I will not have this order anymore. But I don't know. In the next couple of weeks, it can get up to 720. I will short from there. Okay, so those are the positions. That's my plan, and that's what I am looking at. Okay, guys, I am now going to unmute some of you guys who had hot mics. Do you guys have any questions? Anything else you guys want to look at or discuss? Nothing. Okay. Matthew, I think you're one of our newer members. Welcome. I hope you find a lot of value in what we're doing here and you're able to learn. I know you said you're new. Just, be sure to ask questions. And if you need to, you can always review all of our videos again. I always post them on YouTube right after going live. So just wanted to say welcome and welcome to the Checkmate trading family. All right. Any other questions? Any other concerns? Any questions, comments, rude remarks? Going once. Going twice. All right, we're going to end our stream, our YouTube stream. Now, our Twitch stream, we're going to keep that up. So throughout the day, I always keep our Twitch stream up so that you can see the charts and the data that I'm looking at throughout the day. I usually keep that on throughout the trading week at all hours. I'll post the video on YouTube. If you're on Twitch or YouTube and viewing this, we also have a Discord channel. Please join us. Join the conversation. We have a lot of really expert level traders here in different fields. And that we love to bounce ideas back and forth. So we'd love to have you in the conversation as well. Hope to see you guys tomorrow. I'll see if I can do an emergency session tomorrow for streaming. But as always, Tuesdays, Wednesdays, Thursdays, Eastern time at noon. We'll be back with high noon highlights. Trade safe. Be careful out there. Markets are wild. And hopefully we make lots of money. All right. Ciao, and I'll see you guys later.